Hey everyone, thanks for joining us. We've got a few more people coming in, as well as put out another post on the page. So we're going to give it a few more minutes. I've gone ahead and started recording. Right now, everybody is on mute, as well as video is turned off. Josh, you do have the ability to unmute yourself, as well as turn your video on if you'd like. The way that tonight's going to work is we are going to be, Josh and I will be hosting this tonight. We'll record it, which it is doing right now. And then we're going to do the presentation. We'll walk through. Josh is going to give us an overview. Again, for those of you who probably don't know Josh, he's the gentleman that actually taught me this. And he and a buddy of his who he worked with developed the system more to a volatile market, the scale trading, as we are going to introduce it. And he's taught this to me. I've just really dived in and gotten to work on the Excel spreadsheet that is going to help you guys know what coins to buy, when to buy them, and when to place your scales. And so Josh will go over the methodology of this, as well as some of the other ins and outs. And then I'll bring him on here in a minute. We'll give a few more minutes for people to jump on. After the presentation, you guys will be able to ask questions. So I will, unmute everyone, and you guys can ask questions as you watch the presentation. But I'm excited about tonight. This is going to be fun. Josh and I have been doing this. Well, I've been doing this for about 5 going on 6 months now. He's been doing this much longer. And so he knows that this works. This has really been a test for him to see how it works in the crypto market. I believe, Josh, that this is being good. And I think you're unmuted, or I've asked you to unmute. Can you hear? There we go.
Yeah.
All right. Good deal. So let's see here. So Josh will be going over exactly the scale trading methodology and the reasons behind it and why it's different than some other type of trading methods out there. I am actually not privy to most of this information. He is much more the expert than I am. I've just really latched on to what he's taught me and have dived into it. So we are really excited about presenting this. This is something that we have actively been pursuing and investing in the past couple of months. I know that my portfolio is, on a quarterly basis, and right now I'm ending my my second quarter, and I'm holding at right about a 30% return each quarter. So that puts me right about 130%, or excuse me, 120% for the year. So it's going to be fun. We're excited about it. So without further ado, I'd like everyone to please listen to Josh Weiss, and he is going to give us a breakdown over scale trading, the methodology behind it, and really why this is a powerful a powerful technique to add to your trading portfolio. So Josh, take it away, man.
Yeah, thanks. And you're more of an expert than me. I'm only at 28.2% since we started in May. Yeah, so thanks, Edwin. This is unique. I'll give you a unique disclaimer. I actually don't like trading in the market. I think it's slanted for the big guys to win and the little guys to just be disadvantaged. But to give you the history on this, so I'm in Tampa. That's why it looks dark here, because I'm on the East Coast. I went to college at a school here, and while I was finishing up my finance degree, a gentleman hired me in the early 2000s. And he was your typical entrepreneur. But before that, he was a broker at Bear Stearns and had very successful career as a broker, making good money. Finally got to the point where he was able to go out on his own. And he loved the market. So he had started to create a system. And at this time, if you were back there trading in the early 2000s, this is when the Ameritrade started showing up, the Scott trades, the E-trades. So these platforms were becoming more and more popular and much more common for the everyday trader to use. They were very easy to use, but also the technology itself between, buy limits, sell limits, trailing stops, things like that. You could trade without watching the market day by day. Well, and so as this gentleman, was also enjoying playing golf and traveling, but he loved the market. And so he was thinking of, how do I systemize a trading approach, trading methodology that allowed me to do the fun stuff I like doing during the day, but also make money in the market. And so long story short, I don't know if you guys remember those commercials, the infomercials, where the guy was like, set it and forget it. It was a rotisserie cooker. He said, set it and forget it. And it's kind of hilarious, but they sold millions of those things. And that got him thinking. And this was before the days of like Tim Ferriss and the 4 Hour Work Week, but he was a system thinker. And so he created, what he noticed in the market is, one, we're not smart enough to fully understand the market, especially as just traders, right? We don't have the big tools and all the expertise of like the Goldmans and all the big names out there. So he knew by default, we didn't have all the data and all the information we needed. We didn't have all the tools that we needed compared to the big guys. And so no matter what, you were just at the disadvantaged spot. And so he said, well, what is one thing that's for sure? A stock might go up, it might go down, but it's definitely 100% not going to go exactly sideways. So that got him thinking, how do I play the ups and downs? And he had technology enough to watch market makers in the market, right? And you could see them getting in between trades and moving positions up and down. But then he also noticed that the markets were getting more and more volatile, probably because of this technology. At that time, there were these things hitting the market called high frequency computers, which were literally fighting over nanoseconds at the New York Stock Exchange to get trades. And that started creating many gyrations throughout the day. If you remember the flash crash, I think it was like May 6th, the market dropped by like 1,000 points and bounced back up. So as he thought about this, he was able to create this system. And it allowed him to really not even trade during market hours. So Edwin will go into a little bit more of the details, but it does play on the volatility of the market. That helps. So as you put in incremental buy stops and sell stops in a structured format, it takes every bit of the thinking out of trading, every bit of the emotion out of trading. Who knew of all these random events that would cause markets to just ebb and flow thousands of points, sometimes in a day, maybe not thousands of points in a day, but we've seen it do that, thousands of points within a week, as all of these macro or global things were happening. And so it's just a very systematic, non-emotional system. And there's a handful of important data points, like your buy level, meaning at what point do we buy this position, in this case, a cryptocurrency. At what increment do we feel that this asset's going to move around? And then how do we structure our positioning? There's that's my dog Maverick. Our positioning in our allocation of funds to diversify enough to all work. And then there's one more thing called the scale bottom multiplier that just helps it all come together. So you have enough capital to ride these positions up and down. And so I was trading this years ago. And then I got into more of a private equity backed executive type position. I've had a really fun career. Thankfully, we've had some meaningful exits. And I've been more kind of cash rich than I ever have. And I typically like putting my money into real estate. But then I was thinking, and this is why Edwin and I kind of reconnected on this particular idea, was the secret sauce to this working really well is volatility. And I started watching these cryptocurrencies traded, and I'm like, oh my goodness, these things are super volatile. And I said, so then I started back testing this. I applied my normal criteria, and then I tested actual results, and I'm seeing like 70 to 100% annualized return. So then I was like, well, shoot, let me actually throw some money at this, because if this really works like I think, I'm gonna put more and more of my cash assets into this, because I think it'll work. And so Edwin and I started really testing it with real money. And this isn't one of those, you could ride these cryptos and you saw people buying Dogecoin at, like half of a penny and riding it up to 50 cents. It's not that at all. but it allows you day by day to make these little trades like market makers, systematically, the buy, the stop, and these things will move 20, 30, 40%, sometimes in a day, sometimes in a week, definitely within a month period, they'll swing. Well, what's funny is sometimes if you looked at May 10th when I started trading, Bitcoin is actually down, but my portfolio is up 28%. A handful of my positions are about flat because we saw a big crypto sell off, and then we've seen a rebound as of late. They're about flat, but on my average position, I'm making 20, 30% because of how the system works. And so we'll go into much more of that, but that's the history of it. It's kind of taking the big boy game and playing their game against them. I kind of think of it like being able to count cards against a casino, because they play volatility and make, minimal profits doing that as market makers and whatnot. We're really doing the same thing as retail investors. So that's the history on it, Edwin.
Well, I appreciate that, Josh. And again, so I'm really excited. And just so that everybody is fully aware, neither Josh or I are holding ourselves out as experts in this. We are not offering advice. We are not telling you what to invest in. We are simply going to share with you a methodology that Josh made me aware of, and I have, knowing myself, I've just sort of dived in and built out an Excel spreadsheet, which you guys, everyone on the call tonight, will be able to obtain. The goal is that you all will actually give us feedback. We actually have a more just us talking, but there's this, I don't know, underlying vibe that we would love for this to become more of a possibly an online platform that our scale traders would log into. And with the advent of APIs, you can connect APIs into these exchanges, which we'll talk about some of the big primary exchanges and why we stick with the certain exchanges we are sticking with. But there are these really powerful tools out there to where we could aggregate potentially, where you log into one platform and you're able to arrange all of your scaled trades on the platform. What that looks like, when that's going to happen, if it happens, we don't know. But the goal is that you all will take this Excel spreadsheet and the knowledge that we're going to present tonight and actually go out and implement it, whether it's with $100. And my two boys, I have he'll be 15-year-old in November and an 11-year-old in May. And they're invested in a crypto, and they're using skill trading with, they started off with like $6 and they're already up to 18 in less than a month and a half. So you can do this with literally nothing at all if you want. And it's all about identifying it's all in Bitcoin or cryptocurrencies right now, but you can do this with stocks as well. So without further ado, I am going to go ahead and Josh, I'm going to take you off the big screen, and we're going to go ahead and dive in here to my desktop too. All right. So all of you all should be able to see this. This is the scale tracker. We're still coming up with the names. I'm coming up with the names of the different things. What you're going to see is a lot of information. Don't get overwhelmed at it. I'm going to go over each one of these items. We're going to zoom in here, and I'm going to share this with you all. All right. So I believe everybody should be able to see this. If you cannot, please, there is a chat box in Zoom. Let me know if you cannot see it. Let me get the chat window up here.
Yeah, Edwin, and while you're doing that, one of the things I failed to mention, so I gave you guys the historical kind of rationale of how this happened, and it was successful when we traded it. So we took his funds and actually started trading this way. But the way I use it now is I'm still in a very high demand role within my business. Again, private equity backed, fast growth, multiple $billion valuation type company. So I actually do this as like a passive investor. I'm able to go to my 9 to 5, quote unquote, and handle that. And then this system's kind of running throughout the day, and I see when the trades happen, and then we make the adjusting buy sells as a part of that. But throughout the day, this is running and it's doing its thing as I'm working, which is kind of cool.
And that's really one of the key criticals, because I don't have the time. Many of you know me or have invested with me before. I'm really in the real estate space, like where Josh has traditionally parked most of his money at. That's really where I operate in. So that's my full-time day job. I don't have a lot of time to sit behind the computer and just watch the market. So for me, this has been really attractive because, as Josh said, it's really hands off. It's passive, I guess, if you will. You like he said, the old the set it and forget it type of mentality, and that's what really made it attractive to me as well. So when you get the Excel document, this is going to be your homepage. This will be your target list. So the target list, if you will, is the brains of the operation. This is really where everything gets set, and how you are going to be able to know what price points to set your positions at, both on the exit and on the entry. So when you're buying a scale and when you're selling a scale. This is version 21-0.25. As we update the versions and you guys give me feedback, that will be updated, and all of you will have access to those updates in the future. Our primary exchange that we are performing most of our trades on is Binance. And I touched on this briefly on the intro. The reason we're using Binance, and really the reason that we would encourage anyone to use any of the excuse me, getting people in here. The reason that we would encourage you all to stick with your primary exchanges is because, number one, we want this to last the long term. We're not in this for a quick flash. So we want something that's going to last through all of the government regulations, as the government is keyed more in on cryptocurrency, and they're going to start regulating it. Whether the crypto markets want it or not, that is going to happen because it is now gone to the masses, if you will. So number one, use exchanges that are right now doing their best to meet the requirements by the SEC, the FDIC, any of the other government regulatory bodies that are overseeing this burgeoning market. So that's number one. Number two, we find that Binance.us has a great platform, and I'll show you at least my back end, what my platform looks like, or what my login looks like. And it's really intuitive. It's easy to understand for those who have never even looked at a market platform before, or a market account for trading stocks and crypto. So I love the simplicity, but it's also, if you really want to dive into it, it's got that ability to dive into it as well. So with that being said, let me walk you through your target list, which is the brains of the operation. Anything in blue is going to be where you can input data. So if it's a blue block, it's input data. Everything else, whether it's a green, whether it's yellow, white, gray, it doesn't matter. None of that can be data input. They've all got formulas behind them that make this whole thing work. So the only thing that you have to worry about is the blue blocks. So that's number one. Number two, simply because we're using Binance, I would encourage you, if you don't have a Binance account and you want to get started, open a Binance account. Josh, you opened a Binance account. How long did it take you to get set up?
Yeah, it was about a week for the time funds were actually able to get accepted into the account itself.
Okay.
I mean, I set up immediately, but funds took a few days from my bank to the account.
Yeah. So it's pretty quick. It actually took me, when I onboarded back in, I want to say February of this year, it took me over a month, almost 4 weeks to get onboarded. So their their process has improved dramatically as well. Tom, you just mentioned in the chat, and anybody who wants to comment in the chat, we will address that as possible. You are right. Actually, there are two exchanges for Binance. There is Binance, which is the international exchange, and Binance is not, we as Americans we cannot have a Binance account unless you use a VPN and you go about it the wrong way. And I won't say the wrong way, go about it a different way. And again, the reason we haven't gone and traded on Binance is because we're trying to stay above board. If you want to use a Binance platform in the United States, go to Binance.us. And I'll have a link after this I can share with you guys. that you can create a Binance.us account. It is available for the majority of the states in the US. Tom, I don't know if Binance.us is not approved in Texas. Unfortunately, there are some states that have not been approved yet, but Binance.us, i.e. the Binance parent company, is working to get that approved in all the states. So that is, thanks, Tom, for bringing that up. But this is based on Binance.us. You'll see it right here. If trading on Binance.us, what tier are you in? So the tier, this is the fee or the cost every time you make a trade. Now, again, I've never traded on stocks. But I know that the trading, if you're day trading, like the fees can, from what I understand, are pretty steep. This is the fee for making a trade, and you'll see it later. I'm going to show you my tracker. The fees are very nominal. It's very easy, and it doesn't hardly affect my my return at all. So you can either put in your maker and taker, and we'll go into that briefly later. But just know this, that this number is actually provided by Binance. And unless you're trading more than 50,000, which you may want to start off with that, but I would assume that many of you may want to just test the waters, if you will. So if you're testing the waters and it's less than 50,000, this will be your fee. So you can use these automatically input fees, and that will be accurate. As you grow, I have already programmed in, based on the dollar amounts and how many Binance coins you have, it'll actually adjust the fee as well automatically. So you'll go into tiers, and the tier will automatically adjust your fee. That being said, the principal balance is the next thing. This is the next box. This is what you're going to start with. Now, as I have integrated the ability to obviously roll profits, basically compound interest, right? We have the ability for you to continue to roll profits back into your scale trading platform or system, so that you can continue to grow on your growth. But the investment amount is your very initial investment amount. So whatever you start off with, that's what you put in there. And unless you close down this and you open up a brand new tracker, you should not ever adjust this. And I'll show you how that works later. Underneath that, this will tell you how much of your principal balance should be invested into each coin. This is all based on how many coins you have, and we'll go in that later. So the more coins you have, the smaller investment per coin that it's going to recommend that you invest in. I have also created a way that you can obviously invest more. Let's say you've got a favorite coin. You know, Doge was a big hit back in May, and everybody wanted to invest in Doge. So if you were like myself and you decided that you want to invest a lot in Doge, then you could obviously ignore that and invest whatever you wanted to. And I've created that in the platform, in the tracker as well. This is really important because this gives you two types of returns. Well, let's go over your realized profits and then projected. Realized are what you have actually earned, and projected is what is currently sitting as a scale, but it hasn't actually sold yet. So you've got scale profits that are waiting to be made. And so this will give you an idea of what you could potentially be looking at sometime in the near future. Total days of trading, I find this tracker is based on a 365-year tracker. So it will be a running 365. So once you get to 366, you're going to ignore the the first day that you started trading, and it will be a rolling 365-day tracker. This will give you your average daily profit and then your monthly profit. Right here will be your active coin returns. So the active coin returns are what coins do you actively have invested in? What are they generating? The average ROI is based on your daily rate. Then you have your year to date or your to date return. And then you have your quarterly and your annual. The portfolio includes all money that you have invested, including your initial amount, as well as all profits that are either reinvested or they're just sitting there waiting to be invested. So your portfolio return obviously is going to be lower than your active coin return, but you will find if you're staying on top of your trades, your portfolio return will be fairly close to your active coin return. All of these are just additional metrics right here, number of scales that have closed, that are open, that are still pending to close. And that'll give you an idea of like how many scales do you have outstanding at that point. right here, we're going to dive into, I'm going to go to a different tracker. I've put in a couple of coins, but this is what, yes, Scott, it does track trade fees. The trade fees are based right here on your maker and your taker. So you have the ability to put it in right here, and whatever you put in right here will be applied to every coin. However, I do realize that, some, especially if you're trading both coins and crypto, obviously if you're trading stock and crypto, your stock trading fees are going to be different than your crypto, right? So I have the ability, if you've got stocks and you're tracking stocks on this, you can input your own fees, if you will, for the stocks as well. And so that will be, you will be able to do that on the individual coin, or you could just set them right here if you're only going to be doing either crypto and or stocks. So great question. Right here's what Josh talked about earlier. So we're going to have our coin, even crypto coins have a ticker. So whether that's the coin or the stock, you just put the ticker symbol in right here, and I'll show you why that's important later. Some of the cells are not actually functioning right now. I haven't been able to figure out a macro that saves the last modified date. So every time you click the save button, I want it to update based on the date and the time. I haven't been able to work out that macro, so I'm still working on that. As well as I have not been able to figure out, as you create more coins, you're going to see them in tabs along the bottom. Haven't been able to figure out how to track when the coin is, whatever coin you're looking at, how many scales have actually closed in that coin. I've got to figure out the formula. Haven't been able to figure that out yet, and honestly haven't dived into it. But those are the two cells or block of cells that are not functioning at this time. So you'll put in your ticker for the coin, and then your entry will be the type of coin. So many of you are probably going to send money in from your bank account, and it's going to be sitting in your Binance account as USD or US dollars. Once you invest into specific coins, you'll want to select what that is. Right now, it's simply a selection. It doesn't do anything. In the future, as we hopefully become more sophisticated with the tracker, that will equate to maybe automatically doing exchanges or currency exchanges. But right now, it's just a simple way to track how you enter the coin that you're purchasing. Right here are your three main numbers. Everyone on the call, I cannot, if you've sort of zoned out up to this point, this is really critical. This tracker and actually the methodology does not work without these three numbers. You have to have these three numbers for every coin or stock that you're investing in. So we're going to cover the buy price. What does that mean? What does that look like? We're going to cover the scale. What does that mean? We're going to cover the floor. And then those three will automatically determine your scale bottom multiplier. Now, the scale bottom multiplier, your SBM, is actually found right here in detail. And what you're going to see later is you can adjust these numbers based on these three. So again, these three right here, this is the key to everything. Josh and I have talked about what this looks like, and we understand that some of you are, you're just dipping your toes in the water. So we want to make sure that at a minimum, that you guys walk away here. I'm going to provide 3 coins today that I will give you these 3 numbers, and you can play with those on those coins. You can go in and find your own stock and coin, and you can create your own numbers. But our plan is that every Saturday, Josh and I will go through, the coins that we're tracking will go in, and we will set these 3 prices for all the coins that we're tracking. And then for those that want to subscribe, you guys will be able to get those 3 coins based on our analysis every Sunday, or at least every Sunday they'll be released for the following week. So that's one thing that we're looking at. Of course, you don't have to do that at all. You understand it, you get it. You can come and create your 3 numbers for any coin or stock that you're looking to trade yourself. So again, when you have this tracker, you will be able to do all of this yourself. There's no need to subscribe to what we're going to be putting out. But every Sunday, that will be the thing. Every Sunday evening, we will release the 3 numbers for the buy, price, scale, and floor, and then you can update your tracker accordingly. So let's go ahead and dive in here. What does it look like when you actually have some coins? So as I said, I've already gone in and I've put in 3 coins: ICX, IOTA, and Doge, excuse me. This is what it looks like as far as what the numbers look like. I'm going to zoom in here a little bit more. So as you can see, sorry, these three numbers, the buy price, the scale, and the floor. So the buy price is basically at what point do we want to buy that crypto coin or stock at or below? So if you have your buy price set at $2.33, and let's say the coin is right now at $2.50, you would not buy, you would wait for that coin, the dust to settle. Now there's different strategies. Obviously you could buy if you wanted to. This is just a recommendation, but the buy price is the maximum that you would buy a coin at. The floor, as its name indicates, is the bottom price, and you would not buy in below the bottom price. The scale is how much does that coin move before you set your new buy price or you sell an existing scale that you have. So the scale is the volatility that Josh had talked about in between, you know, the big market mover or market makers. That's what we're playing on, is that volatility. Then right here, you'll see your scale bottom multiplier. You'll see the percentage of change. Average, you want to keep it right about 10% to 15%. That's a pretty healthy average. You might, if it's a, you know, if it's a really volatile, it's moving a lot, or maybe the scale, the amount that it's moving is not that much, and you want to really maximize how many times you are entering and exiting a scale, you might want to keep your percentage of change closer to 8%, right? So also this tracker lets you know how many coins, or in the case of stock, how many stock that you should buy with each position. So this lets you know your position size. So for ICX, our position size should be 170. For IOTA, it should be 182. And for Doge, should be 1,166 coins. So every position should be that size. This is your reinvestment size. So as you earn profit per scale, this is what you're making this money, and that reflects into how much an increase in your reinvestment size should be as far as your position. And then of course, these are the exact buy price or sell price for each coin based on the scale bottom multiplier. So it's really, really great. You have up to 7 positions that you can enter and exit out within your buy-in price, as well as your floor. If the floor, let's say the floor is $1.40 for ICX, and the scale bottom multiplier, once it falls below $1.40, it's going to be red. That's going to let you know that these scales are below your current scale range, if you will. So it's just a heads up. Hey, if you're entering this area, you're entering outside an unknown framework, if you will. So does anybody have any questions up at this point? If you've got any questions or any comments, please put them in the chat window. I'll be sure to answer them along the way. As I said, you could invest whatever you want. I've started off with 5,000. I actually started my account with 6,000, but you could start it off with 1,000. Let me show you what that looks like. So let's say you decide to do this, but you only want to do 1,000. You're going to see all the numbers change. So now your investment per coin, based on the number of coins that you are actually invested in, changes to $333 per coin. And then you can also see right here, your position size, it changes, as well as your profit per scale obviously changes because your positions are smaller.
And someone asked a quick question going over the scale, and I would say all of these, you have to understand, as Edwin was really highlighting, are all part of the recipe to make the cake. So you really need every bit of them and need to understand when you think of the scale. Like I was a technical trader when I first was trading in the markets with this gentleman. And so what you're looking at to determine your scale, you generally want a 10 to 15% move. These cryptos move like that all the time. It's not uncommon at all for them to move 20, 30% in a small amount of time, meaning a few days to a week. And what's funny is sometimes they'll move up and move down, and they'll really be about the same price in general when you look at a week to week or even month to month. But you want these scales are going to be essentially your profits that happen and get booked in. So if you're looking at, and I'll just use simpler math, if you use a $2, say your buy price is $2, right? 10% of $2 is 20 cents. So you can easily put 20-cent scales in. because that's the movement of the stock that I'm sure Edwin will show you is what we'll be doing the buying and the selling positions as the stock or the coin naturally moves. So a general rule of thumb is 10 to 15, sometimes even 20% is what your scale is going to be, but that's based on your buy price. So if your buy price is $1 and you want a 10% scale, it's only a 10-cent scale. Yeah. So, and I'm sure that'll make more sense with some actual examples.
And I think, and thank you for that, Josh. And for everyone that's maybe still a little confused, I'm going to show you my tracker that I've been keeping since May of this year. So you're going to see how those numbers actually work out in actual like actual scales, both sold and open and closed, if you will. So with that, let me go in and actually start showing you what it looks like to create a coin, or how does this whole process actually work. So right now we're in the target list. If you're going to create a new coin, let's say I'm going to create a new one just off the top of my head. This is not a coin at all, but I'm going to put it in there. And so let's say we've looked at it. It's $1. Let's say the buy-in price is $1. We're going to go ahead and do 10 cents, excuse me. And then let's say the floor is 60 or 60 cents. So there we go. This is our new coin. So as you can see, there's a scale bottom multiplier. Every scale will be 10 cents. Now, there's two ways that you have to, for this tracker to work, you have to do two things. You have to, number one, come over here and you're going to click a number 1. By default, it's always a 0. Now, if you say, this is basically you telling the brain, this is a coin I am actively going to invest in. Once you do that, you're going to see this warning come up here. It says the number of coins checked in column C or the number of active coins in tabs do not match. So as you can see, we've got 4 coins, ICX, IOTA, Doge, and YXV, but we've only got 3 coins down here. So after you input your coin or your stock and you determine your buy price, your scale, and your floor, and then you're going to type in number 1 in this column. You're going to come up here and you're going to click new page. Once you click a new page, it's going to ask you for the name of your coin or your ticker symbol. So we're going to go YXV. I believe that's what it was. And now we have YXV at the bottom. What you're going to do when you first create or first start tracking your very first coin, you're going to come in here and in the symbol, you're going to come and voila, there it is, YXV. I was right. So you're going to click that. And once you do that, it's going to auto populate everything that you need to begin to start tracking your scales and your positions. So it says right here, based on 4, your recommended amount is 250. Now you could say, okay, I'm going to put 250 in here. Now there's a reason that this is negative 4,250. And don't worry about that. Right now, we're just going to focus on this. The actual amount. So this is what you're telling the brain, the tracker, this is what I'm actually investing into this coin. So underneath that, your actual position will be 63 on every position, what rounds up, obviously. And your actual position profit per scale, so that's PPS, the profit per scale should be $6.25. Now, when you come in here, also, I want to go over the fees because Scott had asked about this. Right here by default, again, everything is based on what you put into the target list. So whatever you have right here, whether it's the system default or you decide, based on whatever exchange you're trading on, whatever their fees are for maker and taker, you could put those in. Or if you decide differently, you can put them in right here. Just know that the default for each coin is going to be this from your tracker. Otherwise, it will be whatever you put in right here. Okay. All right. So let's go ahead and we're going to place our first order. Today is the 16th. So let's say you get off the call today, you're going to go ahead and open up your Binance account, and then you're going to place your first trade, let's say after 3 weeks. So let's say you place your first trade on the 10th of October. So when you place your trade or you place your order, It's going to let you know every yellow section is going to just say, hey, listen, this is a pending scale. The scale has not executed yet. It's just pending. And let's say the day that you decide to enter YXV, the bought price or the buy-in price is not $1. It's actually, let's say 75 cents. All right. Right here, next to this, also to make the internal calculations for each coin work and specifically for each trade, you need to either you've ordered that scale based on the market price or the spot trade or the limit and stop or the limit or the stop limit trade. So specifically for Binance, if you place market orders, it's actually going to be a higher fee than if you place a stop limit or a limit order. So I just always recommend just stick with the stop limit. It actually allows you to control your risk more by setting your stops or your stop limits. So do that. That's my recommendation. You can do, of course, whatever you want. Now, this is your recommended size, and this is the cost of each size. So your size is 62.5, so we could do 63 on this one. Once you put that in, it's going to sit there, okay? Let's say you get a notification on your phone on the 16th that scale actually purchased. So you go into your tracker, you put it in here. Again, I want to be clear that this tracker is not connected to your Binance account or any of your exchanges. If you get a notification that you've executed a trade, for this to work, you actually do have to go in and input the data here. Again, depending on how many scales you have going on, this could take just a few minutes out of your day, or like this past week, Josh, as well as I, were spending almost an hour putting our trades because things were flying off the shelf. We were exiting and entering trades a lot. So it all depends on how active you want to be involved in this, but you do have to manually go in and put in the information in the blue block. Joanne, is the buy price the price you want to enter a position or the actual buy price? So the buy price, great question, Joanne. The buy price is the recommended maximum purchase price of any coin or stock. It doesn't mean you have to wait for that stock or coin to get to that price. It's just saying at $1 or below, you should definitely enter this coin based on the data that we've put in for your floor, your scale, and your buy-in price. I hope that answers your question. Josh, any questions or any comments so far?
No, I
Okay.
think when we get into some real positions, it'll really click too. This is probably a lot of information.
Yeah.
But
do you want me to go ahead and just jump into what I've got on my tracker?
Well, maybe maybe finish this one example.
Okay.
Like just, because we're already making this one up, but say this thing in 3 days from now actually sold, which of course is still at 85 cents. So
once you have your sell here, or excuse me, once you've got your buy-in scale, so you've bought in on the 16th of October, it automatically lets you know what your suggested sell price is. So you immediately go in, let's say you're on top of your I's and T's, you go ahead on the same day and you place your exit scale. So you're going to go ahead and say, well, I know that I'm at 63. We're going to go ahead and do 63.
Yeah, you're always matching your buy and your sell when it comes to the number of coins and whatnot.
And then your actual sell price, actual sell price, again, this is the recommended suggested. So you have to actually put the price in that you're putting your stop limit or your limit sell or your limit exit. So you do have to actually put that in. So let's say you go in, you do the 85 cents as recommended, and then you're going to do your stop limit. Now, what it does as well, the tracker will let you know what your projected profit is. And then all the other numbers will be filled in once you actually make that exit scale. So let's say it is now October, let's say it's October the 25th. Oops. Yeah. October 25th, you actually exit that scale. So right here, it lets you know what your gross profit was, what your sell costs are. And and I've got to go in, guys. I apologize. I was working on this tracker last night, and the sell cost and the buy cost, the purchase cost, those should be calculated. I'll show you on mine that it is functioning. So I've got to go in and adjust some of the formulas. But that will actually let you know what your costs were. And I have to say they're actually pretty accurate. So that's a good thing. It's going to let you know what your sell costs are. It's going to let you know what your net profit is and then the number of days. This is important because it will let you know what your current ROI is.
Yeah, and real quick, that one position itself. So this is looking at the whole allocated dollars on the calculation above, but that one profit itself was roughly 13% in 9 days.
Yeah.
And one other point too, I know that this is kind of set up really elementary to tell you this is the recommended price, but don't try to outsmart the system. Don't try to go, oh, it's telling me 85. I'm going to go 84 or 87.
And I'm going to actually show you guys why you shouldn't do that, because I did that early on. I thought I would outsmart the system. I'm like, you know what? Man, this coin is going gangbusters. It's going to go to the moon, as I'm sure we've all heard. And so the suggested position was low, and I like tripled my suggested position on every one of those. You're going to know which coin when I go to mine. And now I've got
with that real quick is, so I always play baseball. And a lot of traders, they trade on fear and greed, and they're trying to hit these home runs, right? Especially in the crypto side. They're going to hold out for that home run, that 2-cent coin that's all of a sudden $3. This system is not that at all. It is literally meant to hit singles every single time. And if you know anything about baseball, if you're a hitter and hit singles every single time, you're going to be a pro ball player in the Hall of Fame. So this is all about the singles, all about the 10 to 15% trades that happen day in and day out. Amongst your portfolio. And that's a different mentality than just trying to trade long in the market. This is, again, just those little incremental profits every single day, like compound interest almost.
Yeah. Also, Josh, I do want to say why the numbers look skewed here. So your days in market, it's always based on the current day. Obviously, when you're actually using this platform, you're not going to be making these actual buys and sells in the future, right? You can't do it until it's the day of. So that's the reason everything's negative, is because clearly we're jumping ahead October 25th when we're actually September the 16th. So that's the reason these aren't necessarily looking correct. I went ahead and, like I said, these three coins, you all will have the buy, scale, and floor. So I went ahead, and this is what it looks like if you're actually doing the coin. You've made a few scales in and scales out. What it looks like in actual real time, if you will. So, we have a couple of entries on the 1st of September. This was the recommended price based on ICX, and the ICX, IOTA, and Doge were actually, let's see, this is really annoying. There we go. The ICX, IOTA, and Doge, those numbers that you all will receive at the end of this call are actually the numbers that were calculated as of this past Sunday. So again, every Sunday you'll get updated numbers. So these are the actual numbers. So I just backdated it, if you will. You'll see where we entered on the 1st, it executed on the 1st, and this one entered on the 1st, it didn't execute until the 2nd, and we went ahead. So the power of this, as Josh was saying, is you can go in and you can set all of your buys. You can actually set multiple buys into the future, so that anytime that coin drops or rises, if you will, if you set it that way, it actually automatically executes. And so that's the whole process, or the mindset behind set it and forget it. It's really powerful. And again, it allows you to step away and not have to worry about the day-to-day of each one of these coins. So we went ahead, and as you can see in ICX, I just formulated it out, went ahead and made some adjustments. And as you can see here, it's calculated out. This is what, for this coin, if you would have made these scales, this is what the actual numbers would have looked like for that period of time. So I'm sure many of you are wondering, what is an actual working tracker look like? So this is my actual tracker. This is the one that I use. As of this morning, I use this one. So you're looking at my target list. These are the coins that I'm currently tracking. This is my active coin, I guess, return, and then my portfolio return. You can see right here on an annualized, I'm sitting at 141. And for a portfolio return, I'm sitting at 149. The reason it's higher for the portfolio than my active is because I've had some pretty recent scales out, specifically within this past week, that have been some pretty good money makers. So the portfolio as a whole is actually doing better than an average of all of my coins since I've started. So that is, I've been in it for 130 days. This is my realized profit. That's how much I've made in 130 days using only $6,000. So that's the power of this. I did not go in and create all of this. You're going to see real quick. I did not go in and create all of this just for the presentation. This is actually something I've been doing since May. I think the 6th was my first day in. So let's go ahead and go in here. Let's go to ADA, because ADA was a pretty good coin. And so this is what it looks like. I entered ADA on June the 2nd. You can see right there. Go ahead,
tracker.
Josh.
These are your real trades in your tracker?
Yeah, these are my real trades.
Cool. I'm just looking at this thing cratering. You get in at 345 and this thing's down in the low 2s. I'd be shaking in my boots.
Right. So
that was I see what you did. That was your recommended.
That was the first recommended price. But then I looked at what I was going at. Also, I do want to let everybody know, as we release the scales and the buy-in, the scale, and the floor every week, the recommended is going to change. That's why you absolutely have to put into the blue what you actually ordered. So the suggested is always going to change based on those numbers that we're providing. So now you can actually make the system work based on the recommended, but what I found, and I had to go back here about 4 weeks ago and dig in through all of my trades, each one individually, and figure out what I actually bought in at, because I realized as I was adjusting my target list, those 3 key numbers, these numbers, this entire column was changing consistently. It was constantly going up and down, recommended price and all of that. So you absolutely, if it's a blue block, you absolutely have to put in that information so that you're making sure no matter what the future does, you know exactly what you bought in and what you exited out. And as you can see, the formula here, the purchase cost is actually accurate, as well as my sell cost are actually accurate. So as you can see here, I bought in on June, I bought in at $1.76 and I bought 75. I'm sticking right with, at the time I was sticking with my recommended orders or recommended position. And as you can see, my recommended position has gone down. These two, 9 and 7, this is when, if you all remember here about a week and a half ago, Bitcoin had a huge sell-off. And so all the coins tanked. Well, I knew that it was I was pretty confident. I didn't know. I was pretty confident it would level back out to where they were at. So I went ahead and entered at 110 and 100. I don't recommend you do that because, as you can see, I have 110 just sitting there right now at $3.25. It is ADA is sort of hovering there. Real quick, I do want to go into the tabs. The tab colors are important. So this is the actual amount that I've dedicated to this coin, but based on the number of scales that I've purchased, primarily because I purchased more of a position than what was recommended, I've now invested $880 into this coin. So you're going to see several coins are along the bottom here: OXT, VET, Doge, AMP, and ADA, where I've invested more than what I was supposed to. And so not only am I going to have a negative annotation right here, but the tab is going to be red as well to let me know, hey, listen, you're actually in the hole in this coin. You probably shouldn't make any more. You should not make any more entry scales until you exit out of some of your positions. So that's why I did that right there. But even still, I've been in this coin 106 days, and this is my annual return for this specific coin. This is my realized profit. This is my quarterly and my year to date. My daily average profit based on what I've done so far is hovering right at $3.27. So
yeah, this is not like dollar cost averaging. It's literally that buy and the sell transaction, and then that's why it's linear in this sheet. But Edwin's a little more adventurous than I am. I literally don't, I let the system tell me 100% what to do. I don't have the brain power to think much after my day to day. And so I literally don't think I can do this almost subconsciously because the number of coins, the position, the increment, I don't even have to think about it. So that's how I trade. And that's a little different than what's being shown here.
Yeah. So and again, I want to show you what happens when you don't just stick with what the platform tells you to do. So here's my Doge position. You will see a big red number right there. My recommended position should have been at 420. Actually recommended is 300. I've got 420 in, or I should have had only 420, but I got carried away, as you can see, back in May. So this May 14th, 16th, 19th, and then in June, I made 3 more. And as you can see, this was my, at the time, that was my recommended price. And as you can see, I'm still sitting on those coins. So my positions are still out there waiting to be traded or waiting to be exited. And as you can see, this is Doge. These are where my exit positions are. And that is significantly higher than where it is right now. All that means is I've got to wait longer to exit out. And that's simply going to drag my returns down overall for this coin. But overall, since May 14th, when I exited my first position, I've still done pretty well. Again, just going back to it, stick with what the system recommends. It works. If you try to game it, you will get stuck like I did. If I would have been doing what I should have been doing, I would have been exiting those positions, or I would not have had near as much into those positions as I do. So these, again, I'm not going to go into all these coins, everyone. I just wanted to show you what it actually looks in a real life, in a real life tracker when it's actually being tracked, what it looks like.
Yeah, let me just real quick. I was looking at my Doge because I got in my very first position on May 10th at 48.2 cents. It's now trading at 24 cents. So it's been cut in half. Yet I've had 17 profits, and I'm up 25.1% on my total Doge position. So that's interesting, right? The coin is worth half. But what happened is in May, especially, it bounced around a bunch.
Yeah.
And every time it was bouncing around, I was booking a profit, buying it again, booking a profit, buying it again, booking a profit, buying it again. So it did all this churning there for really the month of May into a little bit in June. And I was booking all these profits while the coin essentially fell lower. And again, I've had, you know, all of those profits give me a net gain on a coin that's actually down 50%.
Yeah. All right. So I'm going to go ahead and stop that. And what I'm going to do, I know that there's some questions. Again, we're going to go ahead and see here. All right. So what I'm going to do is I'm going to read through some of the questions. No, Josh, I can see you've been answering some of them. Okay. So I'm going to go ahead and allow you guys to unmute yourself. So you now have the ability, everyone, to unmute yourself if you would like. And then please ask either myself or Josh questions. We can answer them. Again, as I said, I'm going to work on making sure the purchase cost and the sell cost, those calculations are corrected, because as you saw in the template, they're not working right now. That's because I was working with some of the calculations, and so I need to get those corrected. I will have those corrected, and then I'll send those out to you all. You will have those 3 coins. And then, of course, you all can input your own coins, and you can determine your own buy-in price, your scale, and your floor. And then that will get you off to the races, and you can start doing this. So let's see here. Bruce asks, if a coin price continues to drop in 8 to 10% increments after purchase, how many additional buys will you make on the way down? That's a great question, Bruce. If you remember on the target list, the scale bottom multiplier, that that algorithm, that's what determines how many scales you will continue to buy down until you can't buy down anymore. So in the target list, if you remember for ICX, I think your ICX was buying at $2.33, and you were able to scale down. If you bought in at $2.33, you could scale down 4 scales. Now, if you bought in much lower than $2.33, then obviously the number of scales before you hit your floor is going to be a lot less.
So the floor determines where you stop buying. I got it. Okay, gotcha.
Yeah, and that scale bottom multiplier, since it knows that, it does the math, and it's actually very simple math. It just goes down in the increments and adds everything together. And then that's divided by your allocated dollars to spend. And that's how it tells you your position size. So it basically is a way to help you not run out of money as a coin drops.
Gotcha.
Basically, it helps you not do what I did on Doge. So you can actually see when at the top, when it's telling you how much of your allocated coin is towards this, or how much of your allocated investment is towards that coin, it adjusts accordingly. So as you're entering more scales, it'll let you know that, hey, you've only got $9 left allocated to this coin that you've dedicated. So you know that, hey, if you do one more scale, you're going to go negative, or you're going to have to invest more. You're going to basically take investment dollars from another coin to continue that investment into that
and
coin.
Doge is another perfect example, because again, we don't know all this stuff. We don't have the tools or the wisdom. As these things fall, eventually they find a floor, and then they start bouncing around, right? That kind of tension between buyers and sellers. So they find a floor, or even they find a ceiling, and then they trade up higher. But essentially in that range you're trying to trade in, it'll find its spot and then start bouncing all around. And that's really where you want to be. You want it in that bouncing around phase, because that's where the profits come from. So
quick. Gotcha. So I've been trading recently a similar strategy, but only for a short period of time, on more of a martingale principle, where each time I buy lower, I double down. So like it drops 5% or 10%, I'll double down, drops another 10%, I'll double down the second purchase. And then it only needs to bounce up just a little bit to be in the profit. But I guess you just have to have enough, you have to start with a small enough position where you don't run out. Would this work with that, or is that discouraged?
I would say that's discouraged. I understand what you're saying, and that's a little bit of the dollar cost averaging mindset, but with a little bit more systematic approach to it, because the buying a heavier position on the way down. I think what that misses compared to scale trading is so many of these coins will go down and bounce right back up and come right back down. So in that, unless you're watching it, you missed out on that profit because you either weren't watching it and you didn't have a trade in. Like today, I bought one, ONE, I think for 16 cents, 16 or 19. But I got the little alert on my phone for 16 cents. I have a 3-cent increment on that. So I'm immediately going to take that position I bought and put it for sale at 19, which 3 cents on 16 is pretty good. It's like 25, 30% gain. And then I'm going to put another buy at 13. So no matter what happens, I'm either buying another position or selling the position I just bought. And that system kind of plays itself out throughout the day. When the market fell in May and bounced back, I mean, Edwin and I were just like, this is crazy, because we're having like 50, 60, 70 profits in trades.
So every time you place an order, you enter a buy and a sell stop at the same time. Okay. So then what happens if your sell stop or if your buy stop gets taken out, do you place another buy stop down to your floor? And you adjust the sell stop lower?
Yeah. So say that example with one I just bought today at 16 cents. Say for whatever reason, it quickly goes and sells at 19, which means I'm out of, I don't have any more of that coin. Whatever my buy price is, as long as it's under that, I'll immediately go put another order in to get back in that position. But if I already bought it at 21 and 18, and I just bought today at 16, when I sell at 18 again, I'm just then immediately trying to buy again at 16. So it'll either go down to 16 or it'll go up to 21. And either way, I'll have either another buy or another sell.
When you reestablish the new position, do you cancel out your first buy stop at the lower number?
Yeah, that's another really good question. What I had found, typically in scale trading, yes, you remove that lower buy because you're now using a higher buy. But these dang coins are so volatile that I've learned to put 2 buy orders in at a time. So on one, meaning one, the coin, I had a 16 and I also had a 13 because I'm trading in 3-cent increments, because these things just move so much that what was happening is by only having one, I was missing it going lower and bouncing back up, which would have gave me a profit. So I personally do 2 buys at
So
each.
if somebody gets a fat finger, you're automatically in profit really quick.
Yeah, and it happens every day.
Yeah.
It's crazy because part of this too that we didn't talk about as much is I believe you need to be in at 10 coins at a time, because being diversified with your holdings is big. Like we've been killing it on algo. I had algo, just ALGO. ICX and ALGO were like my hot coins this last week. A lot of my other ones were pretty quiet, but those two took off and sold out of our holdings.
Hey, Josh, you said something about how many types of coins, the number of coins you should be in, and your voice cut off a little bit, so I couldn't hear that.
Yeah, so I like being in at least 10 different coins at a time.
How many, Josh?
10 at a
10.
minimum. When I was doing scale trading in the stock market before, our system was actually at 20. We assumed $1 million portfolio and did 20 different stocks. So that's obviously 50,000 a position. You want to, match that precisely. So if you're in 10 coins and you have $100,000 to invest, be in $10,000 per position, or allocate 10,000 per position. I'm sorry, not per position, per coin. And then that scale bottom multiplier tells you how many coins to be in per buy and sell.
And just Bree, if I can, like I'm actually in about 18 coins. So I like, so Jess Breed, I know that you're invested in loans like myself. It's all about spreading, having that diversification. So my mindset was, well, I'm going to diversify this as much as possible. And because I'm tracking on around 18 coins, my average return is actually, it's pretty high, but it can take a lot of time. And there's actually a few coins, like actually the 2 that Josh mentioned, Algo and One, I haven't even been able to place any trades. I've been black on that coin, meaning I don't have any scales opened on the buy or the sell for either one of those coins. So, but I take the approach of diversification across many coins, and my allocation per coin is pretty low. It's like right around 420.
Yeah, I wish I had been smart like that. I think I went pretty heavy on Doge way back when, Doge to the moon.
Yeah.
And but
I know, man. I feel you.
One Matic.
This is totally different than just playing a long game or thinking you picked the right stock. This takes all that thinking out of it.
Yep.
It is just math, because these things move so much. The math works. You're either going to buy or you're going to sell. And as you keep selling, those monies just kind of like go off to the side in banked profit. I was looking just at my account just now because I was curious. I'm in 71% cash right now because we've had such a good run up of these coins running up as a whole and selling out with some of the Bitcoin run. So I'm ready to go when the next wave kind of ebbs and flows, and it just does it naturally.
All right, so this is Greg. So yeah, I asked how does your system know the volatility? Back in May, Doge was volatility was crazy, but all the way from late June, July, it's been super flat. I know Edwin said he was in some positions that he bought a little too much of right now. So there's no volatility indexes that are plugged into this. It's simply guesswork right now. They're saying, hey, in an ideal scenario, be conservative, take a 25% profit on these swings and move on from there. Is that what the system does?
Yeah, so it just assumes that the particular coin will be volatile. And I'm looking at my Doge tracker right now. I bought in at 48 cents. I actually bought as high as 50.7 because when I bought in on May 10th at 48.2, I literally sold on the 11th at 54.2. I think this is when Elon Musk was like on Saturday Night Live or said he was going to improve the tech. Well, then I literally bought the same day on 5/11 for 50.7. So the system doesn't know the volatility, but what I assumed is 6 cents. So my scale increment was 6 cents. And so when I bought at 48.2, I literally sold at 54.2 in one day. On 5/12, I bought it for 44.7. On 5/13, I sold it for 50.7. And so the buy and the sell, again, we don't have to think about it. We don't have to say, should it be 5 cents or 4 cents or 3 cents? If we've agreed on 6 cents, which at the time was roughly 10 or 15% because the stock or the coin was trading around 50 cents. It's moved in those increments quite a bit. So these coins just move in a volatile way by themselves, and some more than others, right? I know there's some coins out there that don't move much. You obviously don't want to be trading those because they're not volatile enough. But in general, they're all pretty volatile. I mean, pick any coin you want. I mean, I typically stay under the $5 coin personally, and typically even more under the 250 coin because those are just moving by 10, 20, 30%.
So Tom
So
asked,
here-
go ahead.
sorry. I was just going to ask a dumb question. So so if I'm looking at my account, like in my maximum risk, say worst case scenario, say we have like a flash crash followed by like a prolonged bear market or something. The most I have at risk is whatever I have purchased down to my lowest buy order, right? As low as that goes. So I'm sort of limited because that's sort of like a stop loss, but then I just have to kind of wait until it rebounds back up at some point, correct?
Yeah, in theory, right? I mean, it could go to zero. So
Right.
and this is why I say 10 positions. So in the example of 100,000 with 10,000 per coin, I could have, just like with the stock, it could go down to zero for whatever reason. It could be worthless, and you lose the 10,000 out of your 100,000. I've not seen that in any coins. I literally never saw that with any of our stocks either, that we traded in the past. But so that's how you manage your downside. There
Just
is
diversification mainly.
Exactly.
Yeah.
Tom had asked, are you selling an advisory service and recommending certain coins that may or may not be on an exchange outside of Binance.us? And then he said Monte Carlo. Tom, I'm not sure what Monte Carlo, I don't know if that's an exchange. I don't know. But we are not selling an advisory service. We are not registered investment advisors. We're not trying to step into that place. We're literally what we're doing is, hey, you guys can have the tracker. The thought process is possibly have a subscription service so that you subscribe to whatever we are tracking in our own portfolio, and then you get the buy price, the scale, and the floor. We haven't even developed that. That's something that Josh and I have talked about, and it's not even solidified right now because you guys have taken time out of your day. You're on the ground floor with us. And so our true goal is that you all would give us feedback as you all are putting this system to work. And if there's metrics that you want to track, that we can do it within the Excel platform, because this Excel platform, again, is going to be the foundation that should we decide to go something that's an online portal, a membership site, this tracker will provide the foundation for that to be developed. And so, of course, you guys would actually be helping us build that by giving us feedback and working with us on that. Right now, there's no subscription service. There's no advising service. There's nothing that you all are going to be paying us right now. That's not what this is at all. So now that may change in the future. When, if, I don't know.
So to be clear, what I'm hearing also is this will work with not just coin and talking about diversification. It'll also work across any other kind of volatile stock, right? That could be in what you guys tend to seem to be leaning towards, anything that is a lower price stock, under $1, $2, $5 stock that has volatility.
Yeah, that's yep.
And you got to also make sure there's enough volume, right? So volume can drive. Sometimes you have volatility because there's not a lot of volume trading these stocks or coins. It is important to have enough volume because you need to be in a position where you could liquidate whenever you need, or that there's enough shares trading to cover your trades. But what was interesting, and the reason I'm a little bit more personally excited about the crypto trading this way, was when we were trading 20 stocks with $1 million starting portfolio, we we would see 30, 40, sometimes 50 profits for the whole portfolio for an entire month. And we're like, that's good. Because again, the little singles. And stocks certainly don't move like crypto. I've been averaging, I'll have to pull the numbers, but I would say over 100 scale profits per month with only trading 10 coins. It's been crazy. And there's been weeks with the movements in some of these coins where we've had 50, 60 profits in a given week. I'm looking at ENJ. I had 26 profits on ENJ and I sold out of it in about a 2-month period. H bar, so HBAR.
Oh man, that's when I wish I would have gotten in.
I know. And
Man, I wish I would have gotten in H bar.
I started buying that one at 31.6. It went down as low as 16.6. So on June 21st, I bought it for 16.6. So about half of what it was trading at, but just sold out on 9.9. My last position that I bought at 31.6 sold at 36.6. So I had a 5-cent scale on that, but I made 11 profits there. ICX has been a good one. Mana, I have 8 scale profits with 4 open positions. OXT 13 profits, Raven only 5, Vet only 3, XLM 6, Algos had a bunch, Doge I've had a bunch. So you can do it with stocks. You're going to get less volatility compared to these coins, and so just be ready for that.
Jaspreet asked us, how many coins are we tracking right now? I'm actually tracking on my target list. I have 24 coins, 25 coins that I'm tracking, and all of these coins are at $5 or below, and they are all on Binance. So it definitely will allow you guys to, if you want to spread your portfolio between 10 and, as Josh recommended, all the way up to, if you want to do a little bit in each coin, you can do that. Those will be the coins that will be providing buy, price, scale, and the floor for, so that you can input them into your tracker. And you can track them without actually even purchase. Like I'm in about 18 coins, but I'm tracking all of them right now.
Yeah, I'm tracking quite a few too, like KNC.
Yep.
NKR.
And again, guys, the reason that we're sticking with Binance.us right now is because Binance and Binance.us specifically is doing everything they can to meet the SEC regulatory guidelines so that they are staying in step with what the SEC wants. That's a critical thing for longevity, because if you're going onto one of these weird exchanges that are doing wazoo crazy stuff, yeah, you could have your money in there, and then all of a sudden, for whatever reason, it gets outlawed. I don't know, something like that. So our goal is longevity with this. It's investing into an exchange that will be around for the long haul. And guys, if you all believe that our fiat currency right now, the dollar, is going to be around for another decade, I don't see that happening. I think that as a whole, the world will slowly start going to crypto as a currency. Even the US dollar actually has a cryptocurrency. It's called a USDT, a US dollar tether. So even the US dollar actually has a cryptocurrency, if you will. It's called the USDT. And these things it's not going away. I don't have a crystal ball. But I don't believe it's going away, and it's going to be for the long term, and it's only going to become more and more solidified, especially as your big investors start getting in, that we've seen within the past summer. Even when it was, like you said, Tom, I think it was either Tom or Greg, or sorry, maybe it was Bruce. One of you guys mentioned like, hey, it was flatlined. No, that was Greg. Sorry, Greg. You mentioned it was flatlined all summer, but even during that summer, there were some big players getting into the space. So I think that it's definitely going to be interesting for the next decade or less.
I'll look into the BlockFi. This is Greg again. I'll look into the BlockFi, but it seems like all the big players that are in this crypto space are doing BlockFi. What have you looked into that, or what's your thoughts on that?
You mean DeFi?
No, BlockFi.
block 5. I've not even heard of that yet.
Okay, well, the people I've consulted with, the people I trust to know, that's been the one that said that is the mainstream. That's the one that everyone is trading crypto in.
You guys must not listen to Anthony Pompliano.
All right,
No.
guys. So we have been on for an hour and 15 minutes, and I want to be respectful of all of your all's time. I sincerely appreciate each and every one of you. As I said, only you guys will be able to get the tracker. My ask is that you actually put it to work. If you're not going to be doing crypto, but you want to take this and do it on stock, that's even better, because I'm personally not doing this on stock. So I would love to see what the results are for doing this with stock. But we would love your all's feedback. Again, Josh and I will be releasing every Sunday, and I have each one of your emails, or I will get each one of your emails. I have all the guests from tonight. So yeah. I don't have anything else, Josh. I know that it was a huge brain dump, especially if you might not, you're just interested, like, hey, I want to test the waters. I want to see what this is all about. So this is, I'm sure, overwhelming, but I definitely appreciate each and every one of you being on the call tonight. If there's any other questions, we'll answer them to the best of our ability. Otherwise, we'll go ahead and wrap it up for the night.
Hey, thanks a lot for sharing this, you guys.
Absolutely.
No, I'll be using it too. I just made a post that on the thing that looks like there's gonna be a bit of a learning curve and some time investment, but it's certainly interesting and great presentation, guys. Good job.
I appreciate it, Greg. Thank you.
Agreed.
Let's see here. Yeah. So I'm trying to get the chat window separated so I can make sure there we go. All right. Josh, do you have anything else for tonight?
No, I think what Greg just said is spot on. To me, this is a very, very simple system because I've had 20 years of experience with it. I think the big challenge is how do we help people understand it in a very simple way, without it feeling overly complicated, because those handful of data points is all you need to start trading. And for it to work. So that would be the feedback I would love, is how do we make this really simple? I did look at that stock, Greg, and MTR. That's a good example of a volatile stock up at 2, went down to the low 1s. Looks like in the last 4 or 5 months, you'd probably trade a 15-cent scale on that and would have gotten about, 4 or 5, maybe 6 profits there based on the movement. So it's a good example of it still works with stocks, but you're just going to get less volatility compared to, pick any. Just do yourself a favor, go pick like 3 cryptocurrencies that are under 250 right now and see what they've done in the last 4 months. You'd be shocked.
Yeah. So yeah, that's it. And I echo Josh. I know that if the tracker, it's not near as complicated. I've got a lot of metrics on there. I want to make as much information possible so that you guys, for those that want to get into the details, can get into the details. But if you simply plug in those 3 numbers, it literally lays out everything that you need to do. And then that's it. You simply look at your tracker and then place your trade or place your scaled trades, your buys and your sells off the tracker. So yeah, we will be disseminating this. As far as Jesprit, you had mentioned who's going to be releasing the information. I've got a CRM that I'll plug your guys' information. I'm not going to send you a bunch of other stuff. It'll be specifically for this. If anything, it'll just be like a mass email, and all of you guys, everyone on the call will be included in that email. And then Josh and I will put our heads together. He'll either release it or I'll release it, but we'll have everyone's contact information. And I will be sending the tracker along with the scale, the 3 numbers for all the coins that we're tracking. You'll have that after the call. And yeah, then be looking for the update on this Sunday. And if any of you guys have a question or you need some help setting up your tracking system, give me a call, shoot me an email. I'll jump on a call with you real quick, do a screen share, and we'll get it set up and make sure that you have your account set up on Binance.us. And for anyone, Greg, I think you mentioned that you're going to be doing stocks. So we're not releasing any data on the stock. Like, this is strictly for crypto coins. specifically on the Binance.us platform. Granted, if you're using a different exchange and they're using these coins, or these coins are available on that exchange, you can use this on that exchange. You're just simply going to need to know what your sell and your buy fees are going to be for that exchange, so you can place it into the tracker. That's it. All right, guys. I'll go ahead and stop the recording and look forward to hearing some great feedback. Thank you very much.